Nampak manufactures packaging in metal, glass, paper and plastic.
Yep, so this is much more of a packaging company. So it's the leading producer of glass enclosures for the beer industry in the Southern African region. Big business in Nigeria and also in Angola.
Market cap 13.3 billion rand, price to earnings ratio of 10.8 and a dividend yield here of 4.7%.
Yeah. Now, when you look at the share price of this graph, you'll see a company that's in pain. They've had to restructure. They had massive problems with their glass. All South African based, competition in the local market. They've had strain on their balance sheet. Now, Nampak's been around as long as I have in
I want
the
to put
market.
that share price graph up because
you can see there it's a total collapse and gone sideways.
I think this company's actually been around longer than you've been around.
Yeah, it probably has been around. And this was the gem. It had such a strong balance sheet.
Yeah.
It was the genuine article blue chip.
now
Back in the day, Trevor Evans ran it, and you're right, it was like a must-hold in an
You had to
industrial
hold it, yeah.
portfolio.
when the new CEO came in, unfortunately that was in
it's
sync
had a
with
series.
a lower share price.
Andrew Marshall basically rescued what was a very poor performer, and then it looked really good and it was expanding in Angola and so on, and then just as Andre de Ruyter came in, it had the fall off also in the African operation.
Yeah.
So a tough job for a CEO to come in and the
But
share
look,
price collapses.
The last set of results were actually quite good.
Better.
It seems to have based itself. They seem to have sorted out the glass division. It looks a lot better. Earnings growth was there. You still got the dividend. They
So
did a
Andre
sale
de
and
Ruyter
leaseback.
now managing a turnaround for the
They've
company.
done a sale and leaseback on properties. They got about 2 billion, 1.7 billion extra cash in onto their balance sheet. I think they've turned the corner, and I think the share price, 9-10 PE ratio, looks reasonably good for a recovering business.
Paul,
So this
can
is where
you
it
get
gets tricky,
excited
because
about this?
mentally a lot of investor community sort of was totally disinterested in Nampak. Then it did well and everyone got a little bit of excitement going, and also obviously when Angola and Nigeria were booming, everybody bought the Kool-Aid.
And now Nigeria is in a
what?
recession, so
Yes.
that obviously is going to have some
Well,
impact
that was like
on
the growth
this
part of
stock.
the business, because remember they bought a packaging and can manufacturing plant there from Crown Cork or from one of the global players, and then Angola they actually built a whole canning line, to manufacture tin cans and aluminium cans, and then that was looking great, but now isn't looking great anymore because Angola's in financial pressure. The glass business, they did a long-year deal to renew with ABI, that's the SAB manufacturing for the beer bottles. Then they had terrible production problems. They say they fixed that. It's quite a complicated story.
Let's just have a look at the share price graph again.
Notwithstanding the fact that its recent results looked a lot better, as Wayne said, I don't think the market's quite bought this now.
You don't believe so,
twice
Wayne?
bitten,
Well,
once
obviously
shy.
the share price is certainly not factoring any
Look, to me,
dramatic.
this is the classic value story. We're probably over the worst in Africa because I think we're over the worst in the commodity cycle. South Africa is probably over the worst that we're going to see. They as a company have restructured a lot. They've sorted out their balance sheet. I think this is the classic value type of
As
investment.
in you should buy this
I
and
think
it's
so.
hot.
You might be 2 years too soon, I don't know, but I'll be hot on this one.
You're hot. Paul, let's see where you go with this
I'm
one.
going to lean hot as well because I agree with Wayne. It's got good management and it's had a tough time, but it's done a lot of the homework required to produce better returns in future.